It's Wednesday, the 23rd of October, 2024. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories in 5 minutes. Let's get cracking. Story number 1, professional investors are pushing out the timing of an interest rate cut in Australia towards the middle of next year, and that is hitting the local share market.
You might think there's nothing exciting about bond yields, but in times like this, they're the things that big investors use to predict what's going to happen to interest rates, and it isn't great news for those wanting a rate cut. A little over a month ago, big investors had priced in a rate cut this year. Now bond yields have risen. It suggests the first rate cut might not be until May next year. There's a sense that the Australian economy isn't slowing fast enough to get inflation down to the Reserve Bank's preferred 2 to 3% target. Also, US investors, well, they're worried that the US economy is better or stronger than they thought, that rate cuts in that economy won't come down as fast as they thought. Bottom line, Reserve Bank might have to keep rates higher for longer. It's been 4 years since the Reserve Bank last cut interest rates. That was in the COVID years, of course. Right now, interest rates are at 12-year highs.
All right, so there's plenty going on, clearly, in the bond market. What does it mean for the share market, though, Sean?
Big sell-off yesterday. The market fell by nearly 2% to just over 8,200 points. 80% of companies of the top 200 fell. All about worries about higher interest rates, worries about consumer spending, worries about business investment. Big falls among the large caps. Commonwealth Bank, National Australia Bank, Macquarie, Wesfarmers, Goodman, Aristocrat Leisure all fell between that 2 to 3% level. The rate-sensitive sectors, healthcare, real estate, discretionary financials, they sold off. Remember, just a few days ago, we're at a peak. Well, seems a long time ago now.
Story number 2, wine exports jumped by a third over the year to the end of September, showing the importance of China as a sales destination.
Exports to China went from $8 million a year to September 2023 to $612 million over the last 12 months, according to Wine Australia. Of course, tariffs were removed in March this year. Exports to China are at premium price points. That means that while volume's up only 7%, the value is 34% higher. What you're seeing is restocking, particularly during the June quarter. That helped boost overall outcomes because the Chinese are buying premium wines. The cheaper red wine is less likely to be sold overseas. Plenty for us locals. Good news there. Otherwise, exports of wine globally was stable, about $1.78 billion. We're at the highest level of shipments in about 3 years. Of course, the big winner out of this is probably Penfolds because, well, Treasury Wine Estates, which owns Penfolds, because Penfolds is the biggest exporter to China.
Story number 3, Sean, Suncorp held its AGM yesterday, and there was some good news from the insurer's chief executive, Steve Johnston, which always sounds like a made-up name to me. Big insurance premium hikes might be over for now.
Yes, some of the very big hikes in recent years might be in the rear-view mirror. What we had inflation, adverse weather, a fundamental reset in global reinsurance markets. That hit profits, especially in home and motor insurance. That led to higher premiums. Now, Suncorp dealt with around 700,000 natural hazard claims over the past 5 years at a cost of around $9 billion. Not a surprise, insurance premiums rose so much. The outlook, though, is much more promising. Mr. Johnston called for the government to spend more money on disaster mitigation, to invest in resilience infrastructure. He also suggested that people shouldn't build homes where they shouldn't be built. Makes sense to me.
Me too. Story number 4, winning the US election, Sean, takes money and plenty of it. Kamala Harris has pulled in more cash in the past 3 months than Donald Trump has managed over the past 18 months.
Since July 21 this year, Harris received money from 4.9 million donors. Trump, since the beginning of last year, just 1.4 million donors. Now, Harris has raised $971 million in the last 3 months. Trump, in that 19-month period, he's raised $894 million US dollars. Big caveat on this. Those numbers don't include money from what they call super political action committees. We hear a lot about Elon Musk's super PAC. If you include that, Biden and Harris were in front of Trump by about $1.9 billion to $1.5 billion. Basically, Trump's campaign gets much more money from there's 4 mega rich people. They tend to spend more money with Trump. whereas Harris's fundraising efforts are much more diverse.
Last one, story number 5. It seems that in sport, Sean, nothing is not for sale. Chanel has bought the rights to the annual boat race between Oxford and Cambridge in the fashion house's first push into sport sponsorship.
The race will be called the Chanel J12 boat race, J12 being a Chanel watch. Not sure how much it's worth, though Chanel is taking the main sponsorship from Gemini, which was a crypto exchange. The boat race, big spring event on the Thames, 250,000 spectators, 4-mile course through West London, first held 1829. Women joined in 1929. I think more interesting is Chanel. First time they've ever pushed into sport. More about Margot Robbie, Penelope Cruz, Chanel than sport, but that's where they're going.
Yeah, indeed. All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 23rd of October, 2024. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.